Hey everyone, welcome back. Today we're looking at Li Auto, XPeng, as they pace Chinese EV makers in a race towards 2023 sales records amid all-time high monthly deliveries. Wholesale deliveries has hit 940,000 units in November, up 6.5% from a record set in October, industry body CPCA estimates. Now, every car maker is making a dash to the year end as they try to meet their sales target. A strong second half of the year has put Chinese electric vehicles EV makers on course to meet the ambitious sales target for 2023 despite a bumpy start. Now, there's been a rise in demand for battery powered vehicles, and this has drives said growth in the Chinese EV market and subsequently throughout Europe and the USA as well. Deliveries of EVs to dealers has hit an all time high of 940,000 units in November, up 6.5%. The previous record was 883,000 units set in October. So that translates to a 35% year over year increase in wholesale deliveries to 7.74 million units throughout the first 11 months of 2023. The CPCA predicted in mid 2023 that a total of 8.5 million pure electric and plug in hybrid cars would be delivered to dealers between January and December, a 30.8% increase over 2022. So 2 out of every cars sold on the mainland now are powered by electricity, giving top buyers like BYD, Tesla, Li Auto a golden opportunity to chase high profitability in the world's largest automotive EV market. Now let's look at Li Automotive's more detailed units that were sold. For Li Automotive, which joined the Hang Seng Index as one of the new constituents in November, reported deliveries of 41,000 units last month, up 1.5% from 40,422 units in October. XPeng has handed over 20,041 vehicles to buyers, just topping its October total of 20,002 vehicles. If the industry tops its annual sales, it will have done so without cash subsidies. On January the 1st, Beijing strapped cash awards that amounted to about 13,000 yangs. That's 1,822 US dollars per car, which EV buyers had enjoyed previously. In the first 4 months of the year, a price war initiated by Tesla's Shanghai Gigafactory failed to bolster deliveries of EVs as customers bet that further discounts would be offered to spur sales. So that's really interesting. The consumers are starting to realize that if they wait a little bit longer, there will be better sales in the future because these car companies, especially Teslas, are kind of desperate to get the Tesla vehicles into the hands of customers. Desperation kicks in. And Tesla is selling an incredible amount of vehicles. They're manufacturing an incredible amount of vehicles. To continue to drive growth, they often do price cuts, but they can afford to do price cuts. Trust me, Tesla can afford to do price cuts. They really can. It doesn't really make a big effect to their company because they've built such a strong company over the years. And they've been through so much tough times, especially when ramping up to Model 3 production. We all remember that. That was insane for Tesla. It was make it or break it for Tesla, and they made it. Now, I've got some more information in terms of Li Automotive November 2023 delivery updates. So we know that they delivered 41,000 vehicles in November 2023. That's representing an increase of 172.9 year over year. 172.9% year over year increase. Cumulative year to date delivery of Li Automotive vehicles reaches 325,000 as the end of November 2023, achieving its 2023 target of 300,000 vehicles ahead of schedules. That's incredible. So, a cumulative year to date. Remarkable that this company has delivered over 325,000 vehicles this year thus far. That's remarkable. Congratulations to Li Automotive. They're really one of those few companies who might be able to challenge Tesla. And I believe this for many different reasons. They got great leadership. They're in capable hands. Xiang Li, Chairman and Chief Executive Officer of Li Automotive, commented, "Bolstered by strong growth momentum of our 3 Li L series models, our monthly deliveries have exceeded 40,000 vehicles for 2 consecutive months. 2 consecutive months, the highest amongst Chinese emerging new energy automakers and premium brands in China, making us the best-selling brand amongst SUVs priced above 300,000 RMB. And that's in China. So they've got the Li L9, Li L8, and Li L7. They've surpassed 100,000 cumulative delivery benchmark and maintain a leading position in their respective segments. In November, Li Auto achieved its full year delivery targets ahead of time, propelled by growing demands. We will continue to strive for 50,000 monthly deliveries targeting in December with a ample preparation in sales, supply, production, and delivery capacity. So as of November the 30th, 2023, the company has 398 retail stores in 136 cities, as well as 320 servicing centers, and Li Auto authorized body and paint shop operating in 209 cities. This is truly remarkable what Li Automotives have aimed to accomplish so far. So now I'd like to talk about the revenue. This is the part where it gets really fun. They've absolutely destroyed revenue expectations for this year, starting with the first quarter at 18.79 billion in the first quarter alone. Keep in mind, their first quarter last year in 2022, that was 9.56 billion. 9.56 billion. This year, they've absolutely destroyed that. And for the second quarter of the year, they've topped it even more, going 18.79 billion. And they continue to exceed expectations. So for the end of last year, the last quarter, they accomplished 17.65 billion in revenue. And they continue that momentum for the first quarter of this year at 18.79 billion, beating their own record. Usually companies don't have a strong start to the year. Li Automotive is different, and I've noticed this. But there's one time that they didn't have the best start to the year, but it didn't make much of a difference. If you take a look, from the end of 2021, 10.62 billion, the first quarter of the following year, 2022, it was 9.56 billion. So it wasn't the best start compared to the last quarter of 2021, but nevertheless, they finished strong on conviction at 17.65 billion. To go from last year to this year, the third quarter, of accomplishing 34.68 billion, that's remarkable. And this begs the question, why is this company so valuable in terms of share price? That's why this company is so valuable in terms of share price, because it's truly a remarkable company that's doing a remarkable thing. What other company, EV company that you know, are doing this well? NIO, XPeng, they're doing well, but they're not doing as well as this. And there's been very few times to buy the shares at an undervalued price, especially for this year. There's been very few price. Perhaps earlier in this year, but listen, after the summer break, this company went on a huge momentum run. And it had a little dip back in October, but that was it. Apart from that, it's not a major thing. They are continuing to climb in terms of revenue and share price. But you know something else that investors really love about investing in companies is the free cash flow. Free cash flow has been growing rapidly for this company, and it's remarkable how well this company has utilized their structure. Just take a look at the free cash flow. Take a look at the free cash flow from last year, the last quarter, quarter 4, 2022. It was 3.26 billion. Compare that with the first quarter of this year at 6.7 billion. Second quarter, 9.62 billion, and for the third quarter of this year, 14.5 billion. So what will the free cash flow be for the end of this year, for the final quarter? Would it be 20 billion? So this company is in a remarkable position to capitalize on everything. And even more remarkable, you can take a look at their cash on hand. Cash versus debt, cash versus lease. Their cash has been rising substantially. And this is cash on hand, by the way. This is cash on hand. This company has a lot of capital, from 56 billion last quarter, to the third quarter this year, 87 billion. Will they hit 100 billion this year? That's my question. And as you can see, the debt has been falling. Debt has been falling from 8.5 billion. Right now, it's at 635 million. That's remarkable. So they've been paying off their debt and raising cash. They're truly in a remarkable position. And something that a lot of people don't really look at is the return on employees. Are the people you're employing actually valuable for your company? Well, it just turns out that while Li Automotive has been struggling in previous years to show that their employees have been making great capital gains for the company, now they can actually have that improve. That's been on the rise too. So when you look at this chart and you look at these little minute details that people tend to ignore, like the ratio return on capital employed, you start to notice that a lot of things are starting to turn around, especially for this company. Something else that's starting to turn around is operating margins. Operating margins is a huge thing for many companies, and so many companies struggle to turn this around. Operation margins. Can you minimize the cost of your operation and increase the profitability? Lee Automotive has demonstrated that and have done that in a wonderful way, and it's beautiful to see. But also profit margins have done the same thing. They've instantly had a flip. This year is the year where Lee Automotive have exceeded expectations for investors on all counts. And it's remarkable to see. It is great to see. But you know what's really incredible? For some time, you can say in market cap, this company has been a little bit overvalued for the last few years compared to how much delivery and money that they were making. But now the price and the valuation is completely justified. It's completely justified. It's caught back up to its justification. And it makes a lot more sense why this company went from a valuation of 13.35 billion to a valuation of 45.37 billion. It makes a lot more sense now. But that is it for this video. Thank you for watching. I really like what Lee Automotive is doing. I'm looking forward to seeing more from them. Subscribe, leave a like. If you have any questions, leave it in the comments. And I'll see you in our next video. Peace.